All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, and I'm definitely happy and grateful for each and every one of you being here with me this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in these markets. So, without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If you all can hear me loud and clear this morning, do me a huge favor, drop me a one in the chat. Let me know my sound is good. It was a little delayed this morning, so hopefully it is all good now. All right, Joy, I see the one coming in. I appreciate it. So that means I'm all good now. Hey, each and every morning in the Forex trade room, as always, and we've been doing it the same way for years. We want to make sure that we start with a very strong foundation, meaning that we take massive action. It's an acronym that stands for and means that we are accepting all possible losses before entering a trade, preparing you for any outcome. We want to make sure that we continue to center ourselves in body, mind, and spirit, ensuring a balanced approach to our trading. Let's trust in our education, strategy, trading skills, and intuition at all times. We always want to imagine our trade successfully materializing and that we are obeying our trading strategy, avoiding decisions based on greed or fear. And we want to make sure that we are never looking back or stopping once our trades have commenced. Hope everybody is having an awesome week so far, both personally and when it comes to trading. Hey, so let's get to it, right? So had the Fed meeting, right? And so the Federal Reserve left the federal funds rate unchanged at between 4.25% and 4.5% for the fourth consecutive meeting in June 2025, in line with expectations, right? As policymakers take a cautious stance to fully evaluate the economic impact of President Trump's policies, particularly those related to tariffs, immigration, and taxation. Officials also noted that uncertainty about the economic outlook has diminished but remains elevated. Despite this, the Fed continues to project two rate cuts later this year, though it anticipates only 1/4 percentage point in 2026 and 2027. In its updated projections, the Fed downgraded its GDP growth forecast for 2025 to 1.4% versus 1.7 in March, and for 2026 to 1.6% versus 1.8. So, slower GDP growth. While leaving the 2027 estimate unchanged at 1.8%, the unemployment rate is now expected at 4.5 in both 2025 and 2026 versus 4.4 and 4.3 respectively, right? So it's creeping up a bit. As for inflation, the Fed sees the PCE rate at 3% in 2025 versus 2.7%, easing to 2.4% in 2026, 2.2 versus 2.2%, and 2.1% in 2027 versus 2%. Right? So with that data, we see why they are holding rates right now, right? Because you can see in those key areas, things are creeping up a bit, right? They're kind of off forecast now from what was originally put out. Okay, so we'll continue to see what happens there. Moving over to Forex, taking a look at the DXY, the US dollar remained below 98 on Wednesday after falling for two straight sessions, weighed down by reduced safe haven demand amid easing geopolitical risk in the Middle East. So far, a U.S. brokered ceasefire between Israel and Iran appeared to be holding despite minor flare-ups, with oil prices retreating sharply from recent highs. Still, geopolitical uncertainty lingered after intelligence reports suggested that U.S. missile strikes only partially damaged Iran's key nuclear facilities, merely delaying Tehran's nuclear program. Meanwhile, investors digested fresh remarks from Fed Chair Powell, who reaffirmed the Fed's commitment to keeping inflation under control. Uh, Powell indicated that rates are likely to remain unchanged until the impact of tariffs on prices become clear. Despite this, markets continue to price in a nearly 20% probability of a rate cut as soon as July. Okay. Looking ahead, investors await Powell's testimony before the Senate later in the day, alongside new home sales data. So if we come over to the calendar for a calendar here, today is the 25th. He testifies at 10 a.m. New home sales is at 10 a.m. as well. And then we also have oil inventories. Just one to keep an eye out for today if you're trading oil. All right. So that's where we are. What else? Quarterly bulletin. Not a whole lot. Not a whole lot. Forecast is 2.3. CPI year over year, miss for Australia. That was a miss there. That's it. So, moving back over to trading economics, oil rising for the first time in 2 days, right? Oil prices rose more than 1% after plunging nearly 13% over the previous two sessions, the sharpest two-day drop since 2022. Traders are closely monitoring developments in the Middle East, where a ceasefire between Iran, um, or ceasefire between Iran and Israel appears to be holding. Meanwhile, President Trump has allowed China to continue purchasing oil from Iran. Okay. Um, European stocks cut gains. Let's see. I want to take a look at S&P, right? They're flat on Wednesday, coming into the day, following a strong session for equities as easing geopolitical tensions, right? So I just wanted to look at these numbers. We can look at S&P and the Nasdaq composite climb 1.1% and 1.43% respectively, with both indexes approaching record highs. The Dow added 1.19%. Gains came after the U.S. brokered ceasefire in Israel and Iran appeared to hold. So we're pretty much on to everything else there. So we did see some gains. Give me 1 second, everybody. All right, sorry about that. So that's that. We'll take a quick look at gold fundamentally, see what's going on there. Gold prices edged higher to around 33.30 per ounce on Wednesday, recovering slightly from the two-week low after falling over 1% in the previous session. Markets continue to monitor developments in the Middle East, where a U.S. brokered ceasefire between Iran and Israel appears to be holding. Uh, Monetary policy front. So that's it. So we read about it, everything else. So same thing is impacting gold. Any questions on the fundamentals? Good morning, Yasina.
Yeah, I got a
Uh,
question because
okay.
it's so much. I mean, it's so many different stories. I seen the news headline where it seems the ceasefire tends to hold, but I believe Iran is still flying drones over in one report that I read. And then the report came out late last night that they said, he said he obliterated the nuclear plant. And then now there's reports that it didn't hit nothing. So it was said that they was waiting on intelligence to get more specifics because it's not as the hits didn't take as how he described. So it's like,
Correct. The data is all over the place. It depends on the outlet and it depends on the spin, right? It depends on the spin. You can look at your major outlets here. You get one story. You go to different outlets like Al Jazeera, and you got a different story. Uh, so it's all over the place. But I tell you what I'm focused on is this right here. The market, right? Your S&P seems to be shrugging it off right now.
but what I was getting to is because
Uh-huh.
I'm in gas. it's because they was reanalyzing, they were
Reanalyze it.
they reanalyzing the what's going on, the volatility. So my thing is, if it's a complete ceasefire, is it more hawkish, or if it's still confused, is it more dovish?
I mean, a ceasefire would lend support because we talk about when you look at those things, right? We look at stability versus instability and how when things are not stable and things are uncertain, right? Things it creates, a lot of caution in the market, right? So if you got a ceasefire, things tend to move positive, right? Which is when I look at here at the S&P, right? You see you got gains except for where, right? In that energy sector. You see, and that's where you're focused in on with your natural gas play and things like that. I know a lot of people are trading oil, trying to figure out what is ultimately going to do. But you can see how volatile it is because one of the main things that people are looking at in that region is what, Joy? Energy, right?
Yep.
Yeah. So you can see when you look at the S&P and the sector breakdown, right? You got it tailing off, whereas before it was moving up. So it's very, very volatile right now, which is why I'm not making any plays in that sector, right? Missed the move to the upside because I wasn't trading oil like Ryan was trading oil bullish, so I believe he caught that move right when everything first broke out. But you can see since then, you've had major declines. So there's a lot of volatility in that energy sector right now. But a ceasefire, a complete ceasefire, right? When you can calm the seas, that's better, right? It's just like how we talk about uh Trump in the markets and his policies, where we always say, like, hey, market participants like stability. They don't like uncertainty. You know what I mean? Like they tend to hold back a bit uh, when there's a lot of uncertainty. So I would say that if you get a ceasefire, right, that's more bullish, for the markets to calm down, to be steady. Now, when you get into your different sectors, right, then you have to get into those nitty-gritty details like you're talking about, right? Because we see now, think about it. When things seem to get a bit steady, right? You're seeing oil tail off, right? You're seeing it tail off. But then when it was like, oh, right, exactly what you're saying, there might not be this strong ceasefire. You've seen it spike again, right? So when we look at, oil rises for the first time in 2 days, well, it was tailing off because my man was on there like, hey, they've agreed to a ceasefire. It's all good. And then it was like, oh, it's not so much all good. So now you see it now, or it rises for the first time in 2 days as a result. So that sector is a little bit all over the place. All over the place. So I'm not making any real strong plays in that sector right now. It's like sometimes when in doubt, what do we always say? Stay out if you can, if you can, Now if you're already in it, then you just manage it the best way that you can.
Yeah, I'm already in it, and how I had it planned out to grab my next move, I'm like, so because it's like I'll get my cloud break, and then I'm finally figuring out when the news come out. It's when I sleep, like when the major news come out, and I was trying to figure out for my losses, and I was trying to figure out the time frame, and then I was just so happily up, and CNN had reported something, and that's when it came in, and when CNN had reported it, and I was like, oh no, and then that's when I seen that gas back dropping down, and I seen crude back dropping down when they said, oh, it really didn't get hit. So then that's when I was like, so I'm confused. I'm like, because I thought ceasefire was more so of a dovish move. I thought, because I mean that's what it looked like to me on the charts.
Yeah.
It's like the minute
Oh yeah.
when they was saying it's war, it's like, okay, we get the bullish rallies, but then since it said ceasefire, they was like, oh well, we're taking our more money out, and then it goes dovish on a ceasefire, and I thought ceasefires was actually good, and no, it's pullbacks.
Yeah, and that's what I was saying. It's when you get into the nitty-gritty and the sector breakdowns, right? So you can see, the idea of the ceasefire. You see, so this is just the S&P, right? The breakdown. You see where you made gains, but that's what I'm saying. Like, well, then you have to get into the nitty-gritty of what sector you're playing in, right? So when you talk about that energy sector, the idea of a ceasefire didn't play so well. Why? Because of supply and demand of oil, right? So if there's no ceasefire, we're all out war and they continue attacking each other, then what was the issue with that? The issue was, man, we've been looking at oil inventories lately and we're like, wow, like the demand is there. But when you have the situation in Iran, right, which is an oil-rich nation, a lot of oil production, the idea of, a possibility of the Strait of Hormuz being shut down, now you've got a supply issue. So we know when we have high demand, low supply, that price is going to go up, right? So it's actually the total opposite compared to the rest of your sectors, right? So you got it. You got it. You see that, right? You see the inverse is happening, right? So, hey, ceasefire, rest of these markets are like, cool. Energy sector's like, nah, right? You know what I mean? It's going back down now because of the supply demand issues. Because if there's a ceasefire, then it's like, all right, well, the supply is not going to be a bigger issue, as big an issue as we may have thought before, right? And you see in the notes, right, from trading economics that he still is allowing, right, for Iran to sell oil to China. You see? So meanwhile, right, President Trump has allowed China to continue purchasing oil from Iran. So you got it. You got it all. You got it all figured out now. You got it all figured out now. So, you know, it's just an opposite reaction, right? Which is why I wanted to show this visual, right? So you can see it's all green for the most part. Consumer staples just down slightly, but for the most part, we're all green on the idea of that what was looking like a ceasefire, but in that energy sector, right? It meant the opposite because it's driven so much by the supply and demand of oil. So
I get
great
what you
conversation, great observation. What'd you say? I'm sorry.
I get what you're saying now, because the minute they said that they was gonna close off the whatever that bottleneck area where the ships
Hmm.
go,
Hmm.
everything started
Hmm.
going up. And the minute they said, no, nah, they not gonna attack, and they end up attacking somewhere else, it went, I got you. Okay.
Yep. Yep. Yeah. So you're on it now. You're on it now. A little bit, a little bit weird, but it's all good. We got it. We got it. So yep, yep, yep. That's where we are. Like I said, great conversation to have because it's cool that you recognize that, right? And we don't want to get caught in those traps. Okay. Any other questions regarding the fundamentals? It's a great question. Reese said there was a U.S. intelligence leak that it was significant, but only delayed Iran for a few months. Now Trump is mad and doing an investigation to see who leaked it. Yeah, man. He he was heated yesterday, dropping F-bombs. Scared that little reporter half to death. Yeah, he wasn't too happy with that, but it's all good. Click it over to the S&P. Looking at I'm not the S&P, but the dollar index. My smart trade is a little bit delayed this morning. So you can see, right, we're moving down. We're right back at that around that 97.84 level, right? So we're bearish right now, right? What else here? Now, right? So we come in, we take a look at this 4 hour, this crown, right? That was drawn up, right? From I believe my man Jeremy said, "Hey, that's a crown, right? We're still tracking it." So that 97.84 is a key level. We've already had a major pullback on the DXY. It's been moving down ever since. So that's the 4 hour, right? Where we've got the crown identified. If we just come out from the weekly, right? Get out of the weeds a little bit, just look at it from a bird's eye view. You see how important that 97.84 level is, right? So it's tested that level multiple times. It's hanging on by a whisker. We'll see if we continue to move lower in that regard. All right. So that's where we are there. So let's go into I start out, I took a look at some of these dollar crosses, right, that we've been following. So we'll look at this Euro USD first, right? Ever since the administration came into office, the dollar has been down, right? We've had our days where it's made rallies and you kind of like, I don't know, but for the most part, it's been down. And so we can see here on our Euro USD trade, we're pretty much moving the opposite of the DXY, right? And so it's moving higher. We got the retest of that monthly level and it's continuing to push long. So, hey, of course, if we continue to see the decline in the dollar, we can eventually see that 119.30 hit on that daily D extension if we move down to the 4. Okay. All right. So we get the question like, Benny, you know, do these trades take a long time? Yes. If you're swing trading, yes, they do. Right? And so here's the 4 hour, right? Still that 119.30 target falling in line on the 4 hour. And so we just continue to run higher, right? So fundamentally, right, we don't see anything that changes and shifts and cause a long-term shift in this path, right? Right now, we're going to eventually get to that 119.30, right? I don't know how long. I don't know if it's 1 week or 2 weeks or a month or 2 months. But right now, because of everything that's going on fundamentally, this is where we're headed to that 119.30 target. We can consolidate for a while, we can move back lower, we can do all types of things. But unless we get a drastic change fundamentally, we're looking at 119.30 on that, right? So what does that tell us? Man, any type of pullbacks, depending on the time frame that you trade, any type of pullback opportunities, um, we may run into some 80/20s along the way to counter chin trade, but any type of corrections gives us the opportunity, right, to possibly get in and run to that target. So here we are on the 1. If we close it in, man, my system is running very, very slow this morning. I apologize for that. But we got a 1 hour target at 116.93. But you can see no matter what the time frame, that ABCD wave is playing out. That's beautiful there. That's a tap right on the 61.8, which is our C. Our C is our lowest point within our AB boundary. Before we go into our C to D push, you got an inner outer trend line break, and we are closing in on that 1 hour D extension. So if the market gives us an opportunity, right, that 1 hour D extension gets hit at 116.93. If it gives us an opportunity for a new fib on a 1 hour and a pullback, if you trade the 1 hour chart, right, it could give you an opportunity to get involved in that play to the upside. Any questions on a Euro USD?
Nope.
All right. Simple enough, simple enough. Um, Moving on to the pound dollar. Okay. So if you've been, you know, uh, if you're trading currencies, if you're swing trading, especially on the higher time frame charts, two money plays, right? No denying that. It's right here. It's right here in front of you on the chart in real time, right? If you've been in this group for a while, trading with us, we saw when it hit the low, we saw when it made a V-shaped recovery, and we see it heading to this 136.61 extension, right? So this is our C. Okay. Boom. Okay. So think about that, right? We came into our low, we got our 61.8, we got our 786. Even up that 61.8, you had some drawdown, right? But this is now up What is that? 1,225 pips. So even if you traded that, right, at a dollar, one mini lot, if you're trading prop, you got $100,000 account, you traded it at one mini lot, right? You're up now. You're up, you know, over $1,000. And all you did is place the trade and you just let it run. Right? You just let it run. Low risk, right? Low risk. Of course, you can risk more than that, but low risk, and you just let it go. So you're getting over 1% there. Right? So long term swing trades. Okay. It adds up. Okay? So it just all depends on your perspective and how you like to trade. Here we are on the 4 hour. Okay. C to D move on the four. Right? Trade your zone, trade small. That way, if you're truly swing trading and you're on these higher time frames, you give yourself room. You don't over risk. You don't tie your margin up, and then you can be in multiple positions at once, right? If that's your trading style. Okay. Okay. Questions on the pound dollar? No, I'll take that as an NO. All right. So moving down. Looking at this dollar CAD. Is anybody else a smart trader running slow, or is this my internet?
No, it wasn't working last night. Like,
Really? Really?
yeah, it was just a picture frame. That's what it was.
All
Like,
right.
I mean, just
Well,
like Donette said yesterday, like, wasn't nothing moving yesterday. So I went on trading view.
yeah. I've been going back and forth myself. Uh, so here we are, right? The daily dollar CAD, right? When we saw that we're getting that move up, we got that drop in that oil price, right? That's really driving that. Okay, so that's a long-term potential 80/20 coming off the lows. We'll see how that plays out, but let's move into some shorter term moves here just to review. So we've got your 4 hour swing that played out a while ago. Now we've broken that down trend line, right? We took it out there. Now we've got this monster correction that came into play, right? So you see this B to C move, right? That on our 1 hour. So you can see here that we're starting a C to D push zone. Okay. C to D push zone. Now, if you're looking at it from the one and you're trading off that huge correction, that's showing up as an 80/20 on your 1 hour chart. Okay. Because we made that huge correction down. You see on that 4 hour, right? Within that AB boundary on the 4 hour. And you can see how this is showing up. I mean, on your 4 hour chart. I'm looking at the wrong setups, everybody. So this is our 1 hour, right? My apologies. This is our 1 hour swing, right? Took out the A, and now we've got this reversal here on the four. I got my charts reversed. Um, Moving towards this target. Okay. So that's your current move coming out of that 80/20 zone. All right. So 175 right now. That's even after the pullback. So we'll see if that wants to continue moving up towards that 4 hour target. We know we've got a daily 80/20 as well. But again, on your 1 hour, that's your pullback and your C to D move. All right. So that's the dollar CAD. We'll see how that continues to play out. Dollar Swiss. right? Been playing this one bearish, right? Continuing to move to the downside. 50% pullback, moving short. Right? We get a really good picture of this off this 4-hour short play. Okay. This is textbook right here. Just letting your trades run. Letting your trades run. Okay. We had a little bit of safe haven appeal with the dollar that's starting to subside, right? And one of the things that we talked about a couple weeks ago that we noticed is that, man, when all of this stuff broke out, because there's been so much turmoil with the tariffs, with the tax bill, all this stuff, you know, um, the dollar right out the gate wasn't acting as that traditional safe haven, right? And so we expressed our concerns about that. Now, we saw a little bit of an uptick when the US started to get involved, a little uptick in that dollar, but now that's even starting to subside. So this dollar Swissy, right, is still moving to the downside. Okay, so we've got a target of 77.45. And right now, all you can say is, hey, we've been moving in the right direction. We got to pull back to a 61.8 off that level, right? Off that level on this dollar Swissy, we're about now, that's 400 pips. So again, it comes down to your trading style. Oftentimes, your trading style depends on your lifestyle, right? If you don't have time to day trade, then swing trading might be the play for you, right? Are your lot sizes as large when you swing trade? No, but you make it up in pits gained, right? Because you're playing larger moves, right? So I'm not on a 15-minute chart or a 5-minute chart, right? I'm swinging this, right? So my stop loss is wider, which means my lot size is going to be a lot smaller, but I'm going to make that up in pips gained, right? So this is up 400 pips, right? So I'm not on a lower chart, getting even with our lower chart swings, right? 80-20, sometimes you can get 20, 30, 40, 50 pips, sometimes larger than that. But this is 400 pips right now, right? So that's the difference, right? In the trading style. So it all depends on, you know, what you like to do. So that's where we are on the dollar Swiss there. I missed this Aussie dollar. This is still whipsawing back and forth. So we made a positive move, right? Then we reversed out a bit. But this is still, right? This has been in play for a long time if you're playing it. I know a lot of people probably left it alone, right? But this is still hanging around in that 80-20 zone. We got a nice correction, and then we see it pick back up, right? And so markets overall got a little bit risk on, and you saw that Aussie pick up. But this is where we are. We really haven't moved anywhere, right, per se. Right? We've taken back what we had gained to the downside on this kind of trend move, and now it's just kind of sitting and stalling, right? And so the same thing with this NZD, USD. See what that's looking like now. Kind of similar, right? Where it's just been a mess, right? This made a deeper correction, but it since took back all its gains, right, that it had made, to the downside. So that one's still dancing around, right? Those aren't clean moves at all, but they're still in those 80-20 zones. So we'll see what the catalyst is going to be. I wanted to look at this Euro Aussie. Man, it's just moving slow. All right. So this is our weekly retest at that level, right? It's been slowly making gains ever since. That's a beautiful break in a retest. And so that's been grinding this way long, right? We remember, right, in regards to the ECB, the European Central Bank, um, they're looking at, hey, we're probably at the end of our rate cutting cycle. Okay. So this has still been making gains to the upside. This is our daily, right? After that trend line break. Okay. Now the Euro Aussie is a big mover. So if we come down to the 4, right, we can see how we've been tracking this. Okay. Long 80-20 finally hit that first target. Okay. Came out of that zone, got a nice push off that weekly support. All right. We come into TP1. Okay. Came into TP1. Right? So what's that? Over 500 pips. Now we're pulling back. Right? So we want to see that continue to climb and make gains, right? 4 hour stochastic is back um in the buy zone. Oh man, this is getting frustrating. Um, okay. So moving down to our 1 hour. See how we're tracking here. So here we are, right? This is our wave, right? So hopefully maybe we get a deeper correction, right? But we came up just shy of that 50%. So maybe we'll get a deeper correction. Maybe not, right? We might not. Uh we may not. We'll see how that plays. We got a 4 hour and a 1 hour stochastic back in the buy zone, right? So if we come in this low into this sub fib, you could drop down to your well that hit. That's weird. I was gonna say it's probably, a decent pullback, but let me
It's
drop down.
that's a breakout from the 200.
100. Oh, so it got going. So it exploded, eh? Your 200 that you're playing, is that on your 1 hour chart?
Yep. The 200 is sitting at 177,865 on. I'm looking at my NT5, so it might be off a little.
Okay. Let me well, if it's gonna be off, it's gonna be off because of the smart trade, not because of that MT5. You better believe that. That MT5 should be accurate. Uh 200 simple. Yep. So we're above it. So we'll see what happens. But we're bullish. We're bullish overall. I was trying to see if I could find a kind of another move to get into it or to add to the position, but we'll leave that where it's at for now. Um, Euro CAD.
I mean, honestly, if
Go
it
ahead.
come back down because it's in between the 50 and the 200, a lot of times it'll come back and kind of test that 200 again. So if it come back around there, that's why I was looking to make another move at.
Another move. Yeah, that's why I was trying to do it with the fib, but I like your idea with the 200 and seeing if it retests that because the fib is just not a clean move right now in that fib that I drew, that sub fib. So that could be a good play to retest to the 200. I like that. See if it bounces and keeps moving higher. I expect it to go higher. It's just a matter of figuring out how to either add or get an initial play on it. Um, Here we are on the Euro CAD, right? So finally, right, broke out of that area, broke out of that zone, and we're moving higher, right? So it's the euro versus the CAD, right? Even though we saw the oil prices make a recovery, made a huge correction, and you see the Canadian dollar suffering as a result, and you can see we broke out, right? We broke out moving long, so I expect that to hit that 160.75. So any pullbacks, look for continuations on that euro CAD. Um, Looking at this euro pound, right? So we can see, right, the euro has been steadily making gains to the upside. And so we can see, right, where we got that reversal, right? H6 retracement, bounced off the weekly support. We've been moving long ever since. Now we're looking at a bit of a correction. That's your daily chart there. If we move down to the 4, we kind of zoom in on where we got that break. And that's clean, everybody, right? It's clean. We didn't take out that A, right? We retraced almost 86%, not quite, but we got a target of 86.64 on that. So again, any type of pullbacks, we're looking for continuations right now on this euro pound. All right. Let's take a look at the 1 hour chart on this, and you can see how, right, we're correcting, but we're still within that AB boundary to the upside. Okay. Okay. So we had a potential 80-20 opportunity there, shot straight through it, right? So that's a failed 80-20 if anybody was playing that. But we've got this ABCD move going on there right now. So that's the Euro GBP. The EJ moved in our direction. We got what we wanted here. So a lot of these plays they've been dragging, but ultimately they've been moving in our projected directions, right? And a lot of times you'll get that slowdown because of there's a lot of uncertainty. So a lot of these moves, right, they're just not like gangbusters taking off and completing those ABCD waves, in record time. A lot of them, are taking a while, right? Because of a lot of the things that are going on fundamentally. So looking at this daily, you can see this swing, right? A lot of back and forth, but at the end of the day, we're moving long, right? With a lot of these euro pairs. So you can see where we've got our daily target there. We were tracking, right? This wide range on this EJ. And you can see how we say even in a range, right? A large range, the market is going to make ABCD waves from bottom to top, top to bottom, and at some point it'll break out. So you can see how it's starting to break out of that range that we had drawn up, and it's moving higher. So again, we're looking for pullbacks. You can see on this last one that we had, a beautiful ABCD wave. After that trend line break, it really got going, right? So look, A, right? B, C, right? And then a D, and we broke out. Okay, so we're gonna look for pullbacks and continuations, 80-20 counter trend trade moves. Should price continue to move up and break that B boundary? All right, you got some daily resistance up here in this area, but we're moving bullish. Okay. Um, does Euro NZD play? Breaking out, went higher, right? Look at that deep swing, right? We didn't take out the A, right? So it has no choice but to go our way. Right? So we're moving along. We're still steadily making gains. So we got a $2 even target on that. Right. So let's continue to see how that plays out. So if you're trading with the current trend, you're looking for pullbacks and continuations, right? Unless something drastically shifts with the fundamentals. Okay. That's where we are. You got a 4 hour stochastic back in the buy zone. Okay? And so when you really, right now, we like our risk to reward. But one of the things that you start to realize, right, as you trade more and more, is when you look at it from a global macro approach and you look at it fundamentally, as traders, right? As traders, we say, hey, we want our risk to reward. We want to make sure that it's good. But one of the advantages that we have, not only just with our technical framework that we use with the Fizz, but also understanding things from a top down, right, approach fundamentally, is that hey, this euro has been gaining. It's been gaining strength. ECB came in and said, hey, we're probably at the end of our rate cutting cycle where we still have other central banks cutting rates or looking to cut rates in the future, uh, among a lot of other things that's going on, right? Um, you could literally, right? Once you gain confidence in that fundamental side, you could like right now, if I wanted to drop, you know, a dollar in on this position or 50 cent or whatever it is, depending on your account, from where it is right now, I have confidence that this is going to continue to move long over time, right? Can it pull back? Yes, right? Can it put you in some drawdown? Yes. But if I took that trade right now, right, I have a lot of confidence, right? Now, could I lose it? Absolutely. Nothing's 100%. But because of you have not only the technical side but the fundamental side, you'll start to build more confidence. And if I had a position right now, eventually it could dance all over the place, but eventually it's most likely gonna move to that $2 target. Right? That makes sense, yes, no?
Yes.
Right? Because ultimately it's about having your direction right, right? So if you manage your risk well, right, and you don't overdo it, you can literally take certain positions that have already taken off, and eventually it's going to move into profit for you. Because we've seen now through pretty much all of these euro pairs, the euro is moving long, right? Against these pairs. We already covered the euro dollar. Okay. We know that for the most part, from the webinar we did a while ago on the Australian dollar, I don't have a ton of faith, in the Aussie. If we move up um, to this Aussie NZD, oh, pretty much have just been right, just letting it sit and letting it figure out what it wants to do, right? But I've got a move that's projected down on that, and right now, right, that's right. So if you trade small, you just let your trades run. Give your trades a chance, right? As long as it doesn't take out that stop, right? It'll move. Right? And so right now, if I took a position on this play, if fundamentally I'm right, eventually it's gonna move down, right? And put me in profit. Right? Right. So that's why really understanding and trying to lock down your fundamentals and adding that as a part of your game, right? Doesn't make everything 100%, but adding it to your game really helps with your confidence when it comes to holding your positions, right? And getting in positions and staying in your positions. Okay. So that's where we are there. So let's delve and take a look at let's go and take a look at some of these indices to see where we are before we close out. Um, so let's take it up here to the S&P, move up to our daily to see where we are from a high. We got this bounce off this 236, right? And we're pushing long, right? So we may be pushing to that 80-20 zone, right? We were seeing if we're going to get that correction there. We didn't, right? So we're pushing higher. We broke that beat boundary. off that 236, and we've got a lot of momentum, right? We saw the S&P, almost every sector except for that energy sector and that consumer staples was slightly down, right? So we're seeing a rally, right? So we've got what looks to be, right, a higher low being put in there, and so we can go screaming into this 80-20 zone. And you can see though, right? You can see we've had this 6,500 mark for a long time. So think about it, right? Think about, you know, we talk about fear, right? Fear and greed driving the market, right? There's a lot of fear here, right? It's a lot of fear here. But man, historically, somebody tell me, has the S&P 500 gone down forever? Yes or no?
Nope.
No,
Nope.
right? No. So another V-shaped recovery. Again, look, V-shaped recovery after your corrections. Okay. So when we put our look at that correction, boom. So now, right, we know as investors that we see these as opportunities because it'll happen again, right? It'll happen again, but we are almost back to the record high. We're almost back to the record high. Right. And so that's why you hear me say, every now and again, like I just sitting in those S&P positions, right? Sitting in those S&P positions, letting them recover, right? Because for one, right, holding the S&P, right? If you're trading the SPY, right, the SPY, it pays a dividend. So even though I had some positions that were down, I was still collecting a dividend, right? So that's some things to think about as well, right? And so we had this 6,500 target set, and that's not, you know, just me. That's me listening, constantly listening in, listening to CNBC interviews, Bloomberg interviews with top investors, CEOs of investment firms, hedge funds, and I heard a guy, I forget where it was from, but major investment firm saying, yes, there's going to be a correction, but I feel with everything that's going on with the administration and where they're heading policy wise, if it all plays out, I see the S&P hitting 6,500 this year. And he was saying that in the middle of a major correction, right? So right now, it's looking like we're headed towards that. Can we see another correction? Absolutely, possibly. Will it be as a deep a correction? Probably not, right? As we got before. But any type of correction in that S&P, just look at it as opportunity. Look at it as opportunity, right? So right now we're staying above that 200. It's looking like we're about to get that golden cross, right? And so we'll see what happens once we break the highs. Oftentimes when you see it break the high, you can see a correction, right? So if we get any correction, we'll move to the lower time frames and we'll see if we can get it. We'll see if we can take advantage of it, right? Maybe we move up in this zone. Maybe we push up in this zone here, right? Uh, this on. So maybe we push higher into the zone, you know, and we either come back to retest the high or we pull back here, right? To this level once we break out. Okay. And that can be tracked, on your lower time frames. But hey, we're steamrolling right now. Is there a possibility in the future that we come back and we retest that? We know that's going to look like an ABCD wave on the lower time frames, you know. So how explosive is it going to be, right? Fundamentally, what's going to drive this thing, higher, right? So you see that 61.52 level, and we've got a little bit of ways, but any pullbacks and corrections, look for it as a possible opportunity to get involved. We'll see. It's got some decent momentum right now, right? And we're gonna continue to watch on this tax bill, overall spending bill coming out of the Senate, right? So let's see what happens there. Any questions on the S&P? No, no. All right. So good momentum right now. We'll take a look at one more. The US 30. Uh, okay. And we'll move up to the daily. Right? And so this, right off of our low, right, we're pushing. Now we were looking at correction plays, which we got on the one, but we've since recovered. So let's clean this up and just look at this as a clean ABCD wave, right? That's moving higher. So that 43,675 looks like we're gonna get there. Right? That's a clean move. We're breaking higher. So we should tap that soon. Our daily stochastic is in the buy zone, right? We've got a new low here. Let's put in. So we'll run the daily levels right there. And we'll put in our highs there. And so we're moving pretty good long. So in your lower time frames, any type of pullbacks and continuations into that 43,675 target. Okay. So we've made the recovery, right? We've made the recovery. Let's see what goes on from there. All right. Any questions over anything that we covered today? No questions? All right. So hey, tomorrow, I'm gonna do a stock breakdown on Visa. Right? Anybody trading Visa? Anybody invested in Visa? Anybody?
I was looking at MasterCard yesterday.
All right, all right. So one of his rivals. So we'll cover that in detail. So if you're into that, definitely make sure that you show up tomorrow because some pretty good data. Quite interesting. Right. And so everybody, if you don't have any more questions, enjoy the rest of your day. I will see everybody back here tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. Have a great day, everybody.
Thanks, Ben. You too.
You're welcome.